to last lecture, we have discussed the basics or concepts related to house property. When tax is payable under the head income from house property, that we discussed. Any person who is having ownership of any house property from which he is getting any type of rental income, he has to pay income from house property tax. Okay, if property is not given on rent but ownership is there, for that deemed to be let out property, DLOP, that concept also we have discussed in detail yesterday. This is a format for solving the problem on income from house property. First, you have to calculate gross annual value. How we will calculate GAV? 3 steps are there. Very simple steps I have written. Municipal valuation or fair rent. It will be given in a problem. You have to just write down the value in inner column. Municipal value or fair rent, whichever is higher. For example, if your municipal valuation is 20,000 and fair rent is 15,000. Here is what? 20,000. So that 20 will go to next level here, higher of step 1. This step will be closed here, like this. Okay, it will not go to of the court. So municipal value or fair rent, whichever is higher, higher will carry in step 2, higher of step 1, or standard rent. I told you standard rent concept yesterday. The Indian Rent Control Act 1930 had been passed by the Parliament of India, under which no landlord can charge rent from tenant above the limits decided by the government. Is that clear? So standard rent, whichever is lesser. So lesser of step 2, that will go to step 3. Lesser of step 2, or actual rent received or receivable. Is that clear? So received also you have to consider, if it is receivable, that if it is higher figure, then you will consider receivable. Less loss due to vacancy. If the property remained vacant for a period of 1 month, 2 months or any number of months, then that loss we have to consider here from actual rent. And unrealized rent, the rent which has not been realized, the rent which is not received by a tenant, landlord, that will be deducted here. But 2 conditions I told. Number 1, the assessee must have taken all legal steps to vacate the property. Is that clear? He has to do FIR if tenant is residing and he is not vacating the property, not paying the rent, then he has to go to legal police and he has to file an FIR. Is that clear? So unrealized rent will be deductible, and secondly, he must have documentation of all the actions taken by him for vacation of the property. So these 2 things will be deducted here, then actual rent will be considered. Now higher of these 2, lesser of step 2 or actual rent, after considering LDV and URR, whichever is higher, that is your gross annual value. Okay? From gross annual value, you can deduct municipal taxes. Municipal taxes, I told some rules relating to municipal taxes. When municipal taxes are deductible, number 1, when taxes are actually paid by an assessee, it may be related to any year, previous year, current year, future years, actual amount paid will be deductible. If municipal taxes are paid by tenant, no tax will be deductible. No deduction will be given here, very important. Clear? In examination, such kind of problems are there. It may be given that total municipal taxes due were 25,000 and actually paid by the tenant are 15,000. So no deduction will be given if it is paid by the tenant. If it is paid by the assessee, landlord, then only municipal taxes are deductible. This you have to understand. So now minus taxes is equal to now. Now means net annual value. Okay? So this is what your final value of property after considering all basic deductions. Then specific deductions are given under section 24 from net annual value. Only 2 deductions are there. A is what? Standard deduction or statutory deduction, which is 30% of net annual value. Why 30%? It is given in section 24. All expenses relating to property like rent collection charges, annual rent, ground rent, everything, he has to mitigate within this 30%. No other deduction is there except interest. In point B, interest on loan is deductible. But condition is what? Loan must have been taken for the construction or purchase of the property. Then only it is deductible. Loan must have been availed for construction or purchase of the property. If it is personal loan or car loan and interest is paid, business loan, interest is paid, no deduction will be given under house property. Very important. Focus. If the loan is taken for constructing or buying property, then only interest deduction will be given. For other loans, no deduction is given under section 24B. So after deducting these two, there will be a final taxable income from house property. Okay, now I will tell you some points. Previously, say before 12-13 years, the deductions under section 24 were given like rent collection charges, interest, annual charges, ground rent paid by the SSC, insurance premium paid by the SSC for the property, property taxes paid, vacancy allowance and unrealized rent. These were the deductions in old section 24. Now it is deleted. Now only interest is deductible, interest is allowed, and vacancy as well as URR is considered in step number 3. Otherwise it is no rent collection charges, no ground rent, nothing is there. Municipal taxes are deductible separately from gross annual value. If there is a question in which it is mentioned that Mr. X is paying an annual charge of rupees 20,000 to his mother, so there may be a question in your mind, shall I deduct it from section 24? No. Whatever expenses are there on his part, 30% of net annual value is given. So problem may be big, but you have to consider under section 24 only two things. 24A is 30% of net annual value and B is interest on interest. Very important. These points will be given in the problem so that I wrote it on the blackboard for your understanding. What is annual charge? Annual charge is what? When the property is transferred, hereditary property or gifted property, there may be a charge. The person who is transferring property, for example, my father has transferred me a bungalow, for example, and it is written in that deed that I should pay rupees 10,000 to my mother every month. If I will not pay, she will go to the court that he is not paying my annual charge. Annual charge is 1,20,000. If it is monthly 10,000, I am liable to pay that. So that is called as an annual charge. This way, insurance premium, ground rent, all these expenses are there, property taxes. Okay, but you have to consider only two deductions: 30% of net annual value and interest on loan. Then it is final income from house property. There may be more than one property is given in the problem, 3 property. You have to calculate property 1, property 2, property 3. Any one property of which gross annual value or net annual value is high, that property you can declare as self-occupied property. No tax will be payable for self-occupied property, as any one property is allowed to an assessor to reside, to use for residential purposes. Okay, then you have to decide in such case which property will be self-occupied. Looking at the figures of municipal valuation and fair rate, you will come to know which property should be having highest value. So that it will be declared as self-occupied property. Others will be let out properties or deemed to be let out properties. Then you can calculate. Final result may be lost sometimes if 3-4 properties are there. So property 1, property 2, 3, this way you have to set off. Okay, and the final result will be here. Taxable income from house property. After this statement of tax liability, tax calculation will be separate statement. This is only computation of total income from house property. Sir, I hope it is understood. If any questions are there, you can ask me. Any questions?
Sir, if rent paid by the tenant is not considered, then why he paid the tax and when he paid the tax?
If tax paid by tenant is not considered, then why he should pay? See, there is an agreement between landlord and tenant. Usually 11 months agreement is there, which is registered, even online registered or notarized. Exactly. If there is a clause in an agreement, then tenant has to pay. That is between landlord and tenant. Which clause should be there? We cannot guide them. But if municipal taxes are paid by tenant, no tax will be deductible here as a municipal tax.
Then why he paid the tax?
That is his own question. Why he pays? Because that is the agreement between landlord and tenant.